there's a clear acceleration that has happened in terms of infrastructure spending in the recent few months, and we expect that momentum to continue. Now, if you look at our outlook piece for cement, where we do talk about this, we clearly see that from about 2 to 3% growth that the industry has delivered in the first 6 months, we are looking at more like 7 to 8% growth, and this is not going to be possible without infrastructure spending coming back. So if we are fairly constructive that infrastructure spending in the second half of this year, going on into next year, is going to be reasonably robust.
Largely public-led, or private players will also step in?
So I would say from an infrastructure point of view, it has been largely a government spending story so far. While private sector capex has picked up in bits and pieces, but by and large it has been government spending. From a cement perspective, I think we have to look at the bigger picture, which is actually residential real estate, which has already been in a 2-year upcycle, and we expect that momentum to continue. So if you think about it, government spending, real estate, which is in an upcycle, plus with a strong monsoon expectation that rural spending should pick up, we think all these things should result in reasonably strong demand for infrastructure and related materials.
And we'll talk about individual segments of the industrial sector and the outlook thereof in just a bit. But because you came out with the report on the Make in India scheme, right, which has been Prime Minister Modi's pet scheme in terms of drawing in investments to make India a prominent manufacturing hub in the global supply chain. Tell us, Pulkit, what is the reality behind Make in India as of today?
Sure. So, as we speak, we complete about 10 years of the Make in India scheme, and about 4 years where action has actually happened on this scheme. Now, if we look at the final results, I think one can call it at best a mixed bag, wherein sectors like mobile phone manufacturing, just to give you numbers, we barely were exporting any mobile phones 5 years back. Last year, we closed at about $20 billion of export of mobile phones out of India. Similarly, if you look at pharmaceutical subcontracting, that's another sector where things have moved pretty significantly. And then there are other sectors, say, for example, semiconductors, where things are at an early stage, but clearly the announcements are pretty promising. Having said that, there are also sectors like specialty steel, automobiles, where clearly things have not moved in line with where they were expected. I think what is important to note is the first leg of Make in India was all about getting business into India, which is low value add work, and all the sectors that I did speak of, say for example mobile phones, etc., the level of value addition still is relatively low, and that is why what we do expect in the second leg of Make in India PLI, there should be more in terms of, say, components, electronics, etc., where value addition will also go up. So I think if you look at the holistic picture, there have been few successes and few areas where things have lacked.